There's a single candlestick pattern that flashes right before the market explodes, but almost everyone ignores it. 90% of traders scroll past it, thinking it's nothing, while smart money quietly enters. You've probably seen it 100 times, but never realized what it was signaling. Today we're decoding the simple candlestick trick, the one that separates retail confusion from pro-level precision. This is the chain catalyst, where we reveal the hidden moves that drive the market. 1. The fundamental catalyst, why most traders miss it. Before we jump into the charts, you need to understand why this happens. Most traders are glued to big indicators, RSI, MACD, moving averages, but they forget that every single one of those tools is built from one thing: price movement. And what tells the story of price? Candlesticks. The market is a psychological battlefield. Every candle represents fear, greed, hesitation, or dominance. But hidden in that chaos is a pattern that appears right before liquidity shifts. The institutions know it. They use it to trap traders before flipping the market. The question is, can you spot it before they do? Let's pull up the chart. 2. Technical CLE, the trick candle. Look at this chart. The pattern looks simple: a strong bearish candle followed by a smaller bullish one that fails to break previous structure. It's what many call an indecision zone. But here's the trick most traders miss. This setup isn't random, it's a liquidity grab. The large candle sweeps stop losses, creating the illusion of direction. Then the small candle traps traders who think the move is continuing. But watch what happens next. Volume drops, wicks get longer, and the next candle reverses, fast. This small hesitation candle often marks the exact turning point of market control. When you spot it near key levels, support, resistance, or fib zones, that's your clue that smart money just flipped the switch. 3. Market psychology, the trap everyone falls into. Here's where emotions take over. Retail traders see the big red candle and panic, they sell. Then they see the small green candle and think, oh, the downtrend is ending. They buy. In that moment, liquidity is created. Big players enter against those emotions. They're not trading what the candle looks like, they're trading what the crowd is feeling. That's why this trick works. It feeds on fear and impatience. 4. The chain reaction, how to use it before it uses you. Now here's the real power of this trick. When you spot this pattern at a key level, don't react. Observe. Wait for confirmation. The moment the next candle closes in the opposite direction, that's your trigger. It's not about guessing, it's about recognizing market intent. This single candlestick trick has predicted countless reversals, from Bitcoin to Euro to US dollar, yet it hides in plain sight every day. When you learn to see it, you'll never look at charts the same way again. So tell me, have you ever noticed this candlestick formation before? Do you think it's coincidence or manipulation? Drop your answer in the comments, bullish or bearish. And if you want more trading insights the rest of the world ignores, subscribe. Because here on the Chain Catalyst, we don't follow the market. We decode the catalysts that move it.